Let's start with what we saw the indices doing in the last week. And some of the better performers in Africa, and there aren't many in the last week, were Namibia, for instance, Egypt, Morocco, and also the JSE. Let's focus on sub-Saharan Africa. Namibia and the JSE tend to reinforce each other because so many South African stocks are cross-listed or dual-listed on the Namibia Stock Exchange. So what pulled up the JSE and what will keep the JSE up?
I mean, Lerato, thank you very much for inviting me to the show. And I think it's always best to start with the global context to understand what has been driving the markets. Indeed. I mean, one of the things that you see in the overall numbers, the figures that you're looking at, say, I think it's about 5% in US dollar terms for South Africa, but Namibia, bulk of that is actually, I think about half, is the strength of the currency. Right. The rand was strong last week, but so most of the other currencies globally against, I mean, the dollar was the weakest currency, yes, probably of all the currencies in the world, if you exclude, say, Iran. And it's been driven by a number of things. I mean, it's been driven by, I guess, it's called a risk-on trade again, whereby everyone is more positive given what's happened with the European debt crisis. Not that it's been resolved, but the countries that are in trouble that need to raise a lot of capital were able to raise a lot of funding last week at much lower costs of funding. So and there were good news in the United States again in terms of the employment figures. People are getting more jobs again, and we've been seeing that trend going on for a while. So this was another positive story, as well as just the earnings front. I mean, the earnings are becoming quite good, especially again in the US. The corporates are doing well. The S&P 500 is rising. I think it's above 13,000 again today, and therefore that basically had a knock-on effect across currencies around the world where the dollar basically weakened.
Most analysts tell us to err on the side of caution, though, when we're looking at some of the data coming out of the US or possibly deals that the Greek Parliament will enter into, or interventions by the ECB, or who's going to mop up some of the bonds and the debts coming out of Portugal and Italy and the rest of it. But in this context, we're told the rand is going to be stronger, at least in the near term. But it's not necessarily a permanent situation, and that for as long as Europe is wobbly, we're still in a high-risk environment. For as long as there's a slowdown in China, we're still in a high-risk environment, and there are fears of even a recession in Europe, for instance.
I mean, there are fears of a recession, certainly in Europe. If you look at the leading indicators, they are pointing to a recession. It might be mild. I mean, it's better to be a mild recession in 2012, but the risk remains there. I mean, our economists like to use the word wild cards, which basically are things which you might not see, like if there were to be a war in the Middle East with Israel and the US bombing Iran, that could have a huge impact on, say, the oil price, which we know the impact that will have across the globe. So the risk of a recession is still there, and the banking sector in Europe, as you mentioned, is still retrenching in the sense that they are not lending. In fact, they are actually borrowing money from large corporates who are the ones who've got a lot of money. So as long as there are those constraints in terms of what will lead economic growth. I mean, on the fiscal side, there is a pullback. It's only really on the monetary side. But even then, the funds, I mean, you saw what the ECB did in December, giving almost $500 billion to the European banks. What did they do with that with those funds? They took it back and deposited to this ECB. Right. So that is not going into the economy. Which is not productive really, capital. It's not really helping.
Botswana is down 0.3% in Pula terms, but up 1.5% in dollar terms. What's lifting that market?
Once again, I mean, this was the rand. I mean, if you look at the underlying market itself, it's basically a mixed bag. There are no standout sectors, especially in smaller markets like Botswana. I mean, if you were to go to markets like, say, Nigeria, where we're kind of seeing some sort of a switch where last year the defensive stocks have done very well. The consumer stocks like your Nestle are basically trading at record highs, whereas the banking sector is trading at record lows. So last week, for example, it was the banking sector that was lifting up the markets. But even then, it's not across the sector even. But you did see a kind of a switch from the defensive.
In shilling terms, it's flat really in terms of performance for the Nairobi Stock Exchange, but it started to claw its way back up.
The Nairobi Stock Exchange, I mean, I was watching you just outside now, talking to our Kenyan colleague. Yes. And it's some of the sectors that markets are expensive. Some of the sectors are undervalued. And therefore, we can expect, my personal view is that we can expect the market to basically trade sideways, especially given that we are going to elections, and we saw the ruling today, which is also adding to uncertainty in terms of how the markets will perform. So I wouldn't be surprised if we end of the year with the Kenyan markets, especially in local currency term, having been flat. But the interest rates are very high in that country, so that has been helping the currency. So you might have your return via the currency.
I'm glad you're saying some sectors have been defensive, others not, for instance, and to a large extent commodities is what lifts African markets. Good prices tends to be what lifts African markets. When the JSE started its very positive trajectory into 2012, it was a resources story before it was a story of the rand. But that doesn't seem to be the case. When you look at the Zim mining index, obviously it's been 50% down this year because of the indigenization. But a similar issue with Zambia, which is down, and that had started to be a darling of investors because they had a stronger kwacha with stronger copper prices, but that seems to be rescinding.
That one is a difficult market. I mean, you just come back from an election last year, and there's a new president whose rhetoric has generally been, call it anti the mining sector, in the sense that that it's not maybe contributing its share into the country's growth. So I think until a lot of the things that have been mentioned before are resolved, I think volatility might remain in that market. But if the copper price continues to go up as it has started going up again, you might see that markets coming back strongly.
We've run out of time. Just in 30 seconds, those markets that are dominated by agricultural stocks, because with food inflation rising, we're expecting to see food prices rise. Producers should do well.
No, sure, but where do you go? I mean, which stocks in the market? I mean, there are, unfortunately, in our continent, there aren't a lot of stocks in that space. I mean, you can think about Zembeef in Zambia is one of the better quality ones that we actually like at Omixa. And but I mean, there isn't a lot of agricultural stocks. You can go and look for sugar. You can go and buy Dangote sugar in Nigeria. You can go and buy Deng flour or flour mills. But even though, I mean, you really need to understand the story and what is driving the underlying operations. All right.